In this video, you're going to see how to overcome the most common reason for experiencing a decrease in capital by simply being aware of certain things and using common sense about some certain things that I'm going to show you exactly how to do in just a moment. Now, I call this video "The Tiger Stalks Its Prey" because it sounds more exciting than sitting on your butt and not doing anything for long periods of time. But the truth is, that's exactly what is absolutely necessary for success in the trading business. And you can easily prove that to yourself by looking at any chart. And it doesn't matter what time frame you're trading on, whether you're trading on the daily or the 4-hour, the 1-hour, or the 5-minute, or even the 1-minute time frame. If you're trading even on the very short time frame, you're going to see that there are long periods of time that you need to not do anything. It's very critical. In fact, it's absolutely essential. You can see it on the chart. So no matter what time frame you're trading on, you're going to be able to see now, you're going to be able to look at your own charts in your own trading business and see that the most common reason for losing trades is entering a trade when there is not an entry signal using your entry method. Entering a trade when there's just not an opportunity. Once you gain the visual skills of seeing how the market forms trends and corrections on all time frames, and this is the real key to trading any financial markets, you need to be able to see on a chart, no matter what kind of indicator you've been using or what kind of tools you've been using, what you need to be able to see is that the market forms trends and corrections on all time frames. And you can see that these formations show you where there are trading opportunities, where trading opportunities exist, what opportunities are available. Many times there just aren't opportunities available, or the current opportunities that are available are not desirable. Later I can show you more about what I mean by a trade that's desirable versus not desirable. Then you can go to each time frame and see what's likely to be the next entry or exit on that time frame. You can measure the amount of time that it's likely to take and how long it's taken in the past for a trend to form and a correction to form. This concept that I'm about to demonstrate to you is not suggesting a trading strategy that's imposed on you. It's not trying to convince you that this is my trading strategy and that you should accept it. It's not something for you to even agree or disagree with, or for you to like or not like. It shows you where the market itself forms trading opportunities. And you need to be aware of where the market forms trading opportunities, not where I'm telling you should get into a trade, where there are opportunities to get into a trade that would result in profit based on what the market does. And no trading method will ever cause there to be other trading opportunities other than those that you can see for yourself on a chart once you learn how to recognize them. No other trading method will ever cause the market to make some other movement other than the movements that you're seeing on your charts. Okay, so this is a chart of the euro versus the yen on the 2-hour time frame. And I can change it to the 1-hour, and I'm just going to see a little bit more detail. That we'll need to see that in just a moment, but the trend that I'm looking at here is better viewed on the 2 to 4-hour range. This big surge up, this is a good example of what it is that I'm talking about that you need to do in order to trade on any time frame. This sudden surge up happened last week, so all of this subsequent movement down took place over last week, the entire week. And so there has been no entry on the medium time frame range, 1 to 4 hour. So on the medium time frame range, the 1-hour, 2-hour, 4-hour range, it's very normal, and you would go through that entire week feeling that everything is perfect and that everything is exactly as it should be if you didn't do anything the entire week. And I'm expecting that we may have a trade on the medium time frame in the next 1 to 3 days, and it may be later over here. And many of you know how to identify those entries, but throughout this period of time there's no entry. So when you come into our live trading sessions, and we're sitting there and it's silent and it's hour after hour going by. Some of the people who are in there are feeling everything is perfect and this is fantastic, and there's no trade. And some of the people during that entire time are experiencing all other kinds of things and maybe jumping into trades and feeling that something is terrible or something is wrong and that everything is bad. And that's kind of how we look at life too, and you can do some personal development work to help you to see that everything is good in life rather than everything is bad. But this is the critical thing, that you need to be able to look at any time frame and know what would be the next entry. So during this period there were other entries for a sub wave right here on a shorter time frame. Now if you caught this entry, if you were able to recognize that this was an entry on around the 1 hour time frame, and then were able to stay in as it produced this trend, and you can clearly see that it was producing a trend and that there was no exit that entire time, then that would be the next opportunity that was available. None on the 2 to 4 hour, one on the 30 minute to 1 hour during that period of time. Now each of these points for the end of a correction right here, and it broke this level right here, which was very easy. Those were trades that were available on around the 15-minute time frame, and we identified those trades in advance during our live trading sessions so that everyone knew that those were trades, and they knew that they were trades on the 15-minute range. So we've had no trades on the 2 to 4 hour, one trade on the 30 minute to 1 hour, and two trades on the 15-minute range. These 15 to 30 minute time frame entries were even more clear and obvious on the euro versus the dollar, and these two entries were identified in advance during our live trading sessions so that everyone knew these were entries on the 15-minute time frame range. Now if you go down into the 5-minute time frame range, and sometimes it's appropriate to do that, but in most cases if there is a trend on the 1 hour range, it's just much more difficult and much less effective to go to the 5-minute time frame to get little pieces of the sections where there were entries that should be on the 15 to 30 minute range. Much easier and more profitable, easier to get more profit on those time frames than to go down into the 5-minute and to look for smaller pieces, and also be likely to end up having some trades that don't work out inside of the noise and chaos that is going on the 5-minute compared to the clarity that we see on these other time frames. But the principle works the same. You just repeat the same process on the 5-minute. You go and look at the last entries and see how long did they take, how long did the trades last, and how long should it take for an entry to form on the 5-minute. And I can tell you that a trade on the 5-minute should last 2 to 8 hours long for a trade between entry and exit on the 5-minute time frame. If you're entering a trade on the 5-minute time frame, you're entering at the beginning of a trend and exiting at the end of the trend, which is the most profitable and easiest and best thing that you could do. But if you're doing some other method, then you would get less than that. But in most cases, most people find that it's much more desirable to have fewer trades with larger profit than to be struggling and fighting with more frequent trading. And of course, brokers want you to trade very frequently, and so that's the method that's commonly taught throughout the industry, is to stay on the very short time frame. And the industry is designed to keep people enslaved to that endless struggle, and that's how brokers thrive, is off of the many people who are struggling with the short time frame. And that's why they put out this propaganda belief that that's the safe place to trade, is on the short time frame. And it's quite the opposite. But anyway, that's not the subject of this video. The subject here is, if you are going through this period of time, no matter what time frame you're looking at, you should be able to know how long does it take for an entry to form, go back in the past and look at previous trends and corrections and look at previous entry signals and exit signals on your charts and measure how much time it has taken. This last correction on the euro took approximately 90 units of 15 minutes. 90 times 15 is 1350 divided by 60 is 22 hours. So if you're trading on the 5 to 15 minute time frame, you should not trade for this entire day right here. There's no opportunities at all. There's really no opportunities. And that's not dictated by me, that's dictated by the market has not formed any opportunities for that entire period of time. And this previous correction also lasted 72 units, and so almost a day that it took for that correction to break. And if you extend it over to here, it's about the same length of time, this one over here. So you'll be able to easily see that there's an entire 24-hour period of time almost where you would not enter any trades even on the short time frame. On the medium time frame, you not enter any trades for an entire week, or that would be perfectly fine and perfectly normal, and you would already know that that's common sense. You would already know it before this ever happens, because all you have to do is look at a chart and you can see this and it becomes obvious to you. The biggest reason why people have losing trades is because they do not wait, and they are not willing to wait or not able to wait for those entries to happen. And during the time where they're waiting for an entry to happen, they feel impatient and they start making up reasons to justify getting into a trade when there's really no entry. Well, the more that you can look at your charts and realize that these periods of time are normal, and realize about how much time is normal for waiting for an entry and waiting for an exit, then you'll be able to go through this process of trading hour after hour, day after day, week after week, and be in harmony with the natural rhythms of the market, and know that this is normal, and know that everything is perfect as you're going through this process, and not start feeling like something is wrong and start causing yourself to sabotage your results because of this feeling of anxiousness. So during this totally normal period of time of waiting for entries, many traders feel like their trading experience is terrible, even though everything is totally fine. And during this period of time, many traders will start to get anxious and make up reasons to get into a trade and justify entering a trade that ends up not working out. And if a trader is trading on the short time frame and goes through a period of time of even one day of not entering a trade, as you can see earlier, going through a day without entering a trade is required on the shorter time frame, or going through a week of not entering a trade on the medium time frame, and combine that with if you see a trade or two that doesn't work out, or if you miss an entry and then you're back to waiting again, that's enough to totally devastate some weak traders who are not able to persevere through these periods of time. This is what causes many traders to give up quickly, because they go through this period of time, they miss a trade, they have a trade that doesn't work out, seems like a lot of time is going by, and many traders just easily become totally discouraged and give up. But now that you know how to look at a chart and clearly understand what is normal and what period of time is normal and what's the next trade, you'll be able to make this business really work.